America's job market is in serious trouble, with reports showing a steady decline in employment growth. For months, analysts have warned of a slowdown, and this trend has become starkly clear in July, as initial data for August reveals even more troubling signs. The labor market is clearly under strain, with businesses cutting back on hiring and layoffs accelerating, as seen in the worst August job losses since the pandemic. The latest figures highlight a sharp drop in job creation, with economists forecasting only 80,000 new jobs added last month, a slight improvement from the 73,000 recorded in July. This is a critical moment, as the U.S. economy relies heavily on stable employment to support its consumer base and overall growth. The July jobs report, which saw downward revisions, sparked debates about the accuracy of the data and the influence of political factors. President Donald Trump abruptly fired BLS Commissioner Erica McIntyre, citing claims of political bias, despite no concrete evidence. This decision has ignited controversy, with critics arguing that economic data revisions are standard practice and that the administration's choice to remove the commissioner may have been politically motivated. Meanwhile, the Trump-appointed replacement, E.J. Antoni, of the Heritage Foundation, has drawn widespread criticism for potentially undermining transparency in economic reporting. Analysts warn that the current low-hire, low-fire environment could signal either a temporary slowdown or a deeper structural shift in the labor market. The Bureau of Labor Statistics, BLS data, shows that job creation has slowed to its lowest level in nearly 15 years, driven by factors like an aging workforce and reduced immigration. However, the U.S. economy has historically relied on a broad range of industries to sustain growth, with healthcare and social assistance leading the way in July. In August, the same pattern is expected, though other sectors like professional services and retail may face challenges. The labor market's health is further complicated by rising unemployment among black workers, who have seen their rates climb to 7.2% in July, nearly 4 years after reaching a peak. This trend, often referred to as the canary in the coal mine, suggests a broader economic slowdown. Meanwhile, wage growth is expected to slow to 3.7% annually, though inflation is beginning to rise, which could dampen consumer spending. Economists remain cautious about the Federal Reserve's rate-cutting plans. A September rate cut is widely anticipated, but some experts caution against rushing into action. If the payroll data falls below 50,000 jobs, central banks might consider a quarter-point cut. However, if the numbers stay strong, they may delay the decision until fall. The uncertainty surrounding these forecasts underscores the delicate balance between economic stability and growth. As the U.S. economy grapples with these challenges, the path forward remains unclear. While short-term setbacks are inevitable, the long-term health of the labor market will depend on how businesses adapt to a shifting landscape. The stakes are high, and the public's trust in economic institutions is at a crossroads. Whether this downturn is a temporary hiccup or a permanent shift will determine the future of American prosperity.